What's going on, everybody? Everybody have a good weekend? Let's see who we got in here tonight. Oh, what's up, TMI's box? How we doing, everybody? Everybody feeling all right? Let's see. We have a big week ahead. Big data came out I'm not sure when it came out, but the margin debt chart is wild right now. The fact that it just started to dip looked like everybody was deleveraging and then whoop, right back up. Now it could be short margin, it could be long margin. We don't really know. It's just total margin, but that's interesting. Let's see. Everybody doing all right? We feeling good? Oh, what's up, Turtle? How we doing, buddy? Let's see. Who's in here tonight? All right, let's do a little bit of a quick Ortex update going into the next week while some people start to filter in. So we've got 88% utilization, stayed pretty much flat over the last week. I mean, we did see it at 91.64 7 days ago, but not really. Like, it's very weird because we're seeing the short interest at like the estimates from Ortex all-time high, basically near the all-time highs, but we're not seeing that reflected in the utilization. So it looks like we're getting closer, or they're finding ways to get their hands on more shares of loan out. Current short interest, though, 20.15%. That is pretty solid. Pretty solid. Ho, there we go. What's up, everybody? Evening from across the pond. Feeling good. There we go. Hit that like. Yeah, if you guys don't mind on the way in, just dropping a like on the stream. Let's see. TMI's baby mama. How we doing? Let's see. Fed up waiting. I mean, the market doesn't care about like how you feel. Like, I hate to say that, but you're going to have to keep waiting. If you want to be in this play, you're going to have to keep waiting. That's just how that works. Like, yeah, we could see another big price movement to the upside and people are going to get really happy about the numbers that they're seeing in their account. But at the end of the day, it's like, oh, well, were you thinking of selling at this spot anyway? Not really, unless you have options, like then it makes a difference. But if it's not like the big squeeze that everybody's talking about, like the next big price run up doesn't mean a whole lot to everybody. Like, yeah, everybody's going to get excited. And this next big run up that we're waiting for could be the last one before these bigger, medium to bigger size shorts need to cover their position. But again, it may not be. We might have to wait for another one. Let's see. This week, it's going to be volatile. That's like it. We're going to see like big moves to the upside. Some piece of news could come out and then we just start coming down. And this is just market wide. Like, we have a lot of stuff going on. We have the infrastructure bill. And then we also have like the government stopgap funding bill that needs to get through the Senate, or the United States risk default, which I really don't think they're going to do. But again, just because it's never happened in history doesn't mean it can't happen. It's just like 2008. It's like, well, we'd never seen something like that in the past, but that doesn't mean that it can't happen. Like, it happened. The hedge funds are fighting for their lives. They won't give up easily. Stay patient. Yeah, obviously. Like, we've seen it. Like, we saw the big run up in June. We saw the big run up in January. Nobody thought it was going to take this long, but somehow they're finding a way to keep delaying it. Eventually, as the price keeps stair-stepping up, they're not going to be able to do that anymore. Did I get a haircut? I did. I needed one. It was getting bad. It was getting real bad. Do you think market crash in the next 2 to 3 weeks? We got our credit rating downgraded, but that doesn't mean we defaulted. Do you think the market crash in the next 2 weeks? It depends. I highly doubt it, though. What are your thoughts on the Evergrand issue? Will it hit the U.S. markets back? Okay, so HR, that's a really good point to bring up. So market crash in the next 2 to 3 weeks? Probably not. Most likely not going to happen. When we think about like what could cause the market to really start to sell off, it's credit downgrade and United States default, but who knows if that's actually going to happen. If they do raise the debt ceiling, they still might get downgraded and we could see some selling pressure. But just like we saw over the last week and a half, what happens when we see a 3 to 4% sell off in the markets? It just gets bought right back up and we come right back over to the 50 moving average in the S&P. Like we can't, it literally, like all of these institutions and all of the retail buyers just keep buying. Like they don't think anything's really going to be a problem. And then we have Evergrand. So Evergrand's a little bit different. It could spread to like the entire global economy, depending on how big it is. But from what I've shown you guys in a couple of videos this week, the Chinese government looks like they're about to step in and help facilitate the restructuring, breaking it into 3 different entities, and essentially buying all of the debt or the buildings that Evergrande had. So if they end up doing that, and remember on those interest payments, there's a month. So they have some time now. There's a little bit of a buffer period after they miss the due date. So nothing's really going to happen right away. Oh, Rhode Island. Thank you so much for the super. I really, really appreciate it. What's up, Vixenator? Happy to have an off night for the stream. Can't wait to see how we do this week. LFG, shout out the mods. Thank you, Rhode Island. Pelosi's confident cost passing the $1 trillion bill next week. No time frame. Yeah, there's the infrastructure and then there's the stopgap. I think the infrastructure one was like 3.5 trillion. Grandy, you do what you want, man. I know you got that big bonus coming in at some point. SCD, are you in Trey's Raid Shadow Legends clan? I have no idea what that is, so I would have to say no. Let's see. Am I a little concerned with the lower volume? No, lower volume is fine. Volume, everybody likes to talk about volume and be like, we need higher volume to like get the price to go higher. No, that's not really how it works. Like, yeah, there has been a trend where we've seen high volume leads to price increases, but we've also seen days where we have really high volume and the price goes down. It just depends on what the buyers and sellers are willing to transact at. Like if let's just say there was a volume of 1 that like on one day, just for example, and let's say AMC was trading that day before this order went through at 40.01, but this order goes through at 100, then the price is going to be at 100. Well, that's low volume, but the buyers and sellers were willing to transact at a higher price. So it doesn't really matter about the volume. Like, yeah, it'll change the days to cover metric, but other than that, it doesn't really do a whole lot. Sean, thank you so much for the super. On the 180-day 4-hour my chart says AMC due for a rally. SPY set to dip to 434. But if they don't pass that ceiling, stocks plunge. AMC moons. Sean, not right away. That won't happen right away. What we'll see is AMC come down first. Like negative beta will not really have an effect. Eventually it could. Like easily it could. We can go over that too. What do you think of SNDL as a squeeze play? Milo, thank you so much for the super. It could. Oops, my phone just dropped. It could. I mean, we saw it run up back when everything else was running up too in January. So it easily could rally with everything else. Kelby, thank you so much for the supers, guys. Love from Utah. Wish me luck with my statistics class. That won't be that bad. You just type a bunch of stuff into the calculator. It spits out the answer. Good to go. Oh, guys, I did well on my exams. I got a 91 on my biology exam and a 93 on my accounting exam. And then you know what I did? Didn't go to class for the rest of the week. Happy Sunday, people. I was watching my Sunday morning YouTubers and threw out a chat to say, get some AMC and GME if they hit. I'm a little bit confused on what you're talking about there. I was looking back at the 2020 charts, and we have actually been doing these rips since March. This will not be our third. It's more like the 6th or 7th. Yeah, but we couldn't get above it. We weren't making new highs. I don't like new all-time highs. Like January, where is this? January wasn't new all-time high. Like, let's go out a little bit further. Like, we touched these two. What was it? 33. It was about 30 in the $33 range where the two all-time highs were at double top. Then it started to break down. And then January, we saw the big run up, but still not all-time highs. And then we broke the all-time high in June. So the two big run-ups are really January and June. The two really big ones. Let's see. Drew, thank you so much for the super. 127.21 AMC pops, 527.21 pops, 927.21. Ooh, every 4 months. Interesting. Could be. That would be fun. What's the view for AMC next week? I mean, I think we had this little period of, what is this on? Yeah, this is not going to fly. We had a little bit of a consolidation day Friday. But again, you have to think about what's going on outside of AMC and GameStop. Like, we're having like a lot of market volatility where there's a lot of uncertainty on what's going to happen next. I've heard a lot of people be bullish about the market going forward because they think that these issues aren't really going to have an effect on everything. Like, there'll be like little speed bumps, but then we'll keep heading to the upside, which very possible. Or if these events are as bad as everybody thinks, then it's like big crash correction, but we don't know which one's going to happen. And I'm on the side right now of they're going to figure it out. They're not going to let it tumble. They're going to do everything that they can to not let everything come crashing down. STV's Liquid IV. There we go. AMC can easily hit 60 without a squeeze. I don't know the time frame for it, but it easily could do it. Do you cover BBIG? Yeah, I mean, I've looked at it a couple times. I've never traded it, so. Can I explain the debt ceiling expiring 9/30/21? Last I checked, it hasn't been passed in Congress. Okay, so September 30th is when the government funding runs out. The debt ceiling is already expired. They can't sell more bonds in order to pay off their existing debt. But what they've done is they've gone into like emergency protocol where they like try to do everything they can to reorganize the money and still pay for stuff. But I believe it's end of October is when they're really, or October 15th. It's somewhere around there where they're supposed to be like, yeah, we can't really do any of this anymore. Like, this is when those like extraordinary measures start to run out. And that's why they need to pass something now. And they're kind of wrapping it into this government funding situation. If the government shuts down like it has in the past, like, we're going to have market volatility. Let's see. Battle of 801. We were back and forth in the Battle of 4001 now. Yeah. We can talk a little bit about computer share too. It's like you can do what you want, but I've heard there's some weird. What I've seen is that there's like positives and negatives to it. Like, yeah, if you register your shares, they're in your name. They're like, it's not a broker. So you're gonna have some like weird issues, I guess. Like, it could take a little bit longer. That's what I've seen. But it also, like, if you're able to register the total flow on computer share, then that would be a good thing. And if there are like so many shares out there, it wouldn't be that like crazy. Like, it wouldn't be that much in terms of a percentage of each person's shares to like register them there and then have that locked up. And then they have to mess around with whatever's out there. But there's also the cons to it. So it's is this really going? It's very similar to what we saw with like the Webull, Robinhood, mainly Webull, when everybody was saying switch over to Fidelity. Did we really see anything happen? And we don't even really know how many people switched over and were ordering direct to the exchange. Like, yeah, like after we did see the run up from like the low 30s, high 20s, all the way up to the $50 range. So it could have had an impact on what what's going on. But like, we can't come out and just be like, you have to do this, move your money over here in order like this, like that. We cannot come out there and say that to everybody. That's like very not allowed. Sean, thank you so much for the super. They can feel free to drop the price as much as they want. I buy calls, they go on the money. I exercise, I get more shares, they get more screwed. There you go, Sean. You can't sell quick if it's over 100,000. I've seen that too. Yeah, it's a transfer agent. I don't know too much about BBIG. So I know it's highly shorted. A lot of people are in it, but I just haven't really gone that deep into it. A little new here. Does crypto market go up and down along with the stock market? It can do its own thing, but if we see like a big market event where everything starts to come down, it's more of like a investor psychology phenomenon at that point. It's not so much like, oh, is this asset going to perform well in this time? It's like people are acting irrationally. They're going to want to sell their investment, get cash, and wait. It doesn't matter what the asset is. It's just like people are just going to liquidate their portfolios, go to cash so that they feel safer. That's just what like most investors will do. Like, yeah, some of them are going to be smart and just buy on the dips, but on a large scale, if the market starts to freak out and everything starts to go down, people are just going to sell and continue that selling volume on the way down. Guys, it could squeeze whenever it wants. Like STV's liquid ID, possibility of AMC 100 at the end of the year. You have 11 calls. It could, easily could. Remember, we're waiting for that next big run up, and like think about the starting points of the run ups. Like the first one was at like 2 and went to 25. Next one was at like 8 to 14 and then went to 77 in that pre-market phase. Now we would be starting at like 40. So how high could we possibly go on the next one? We would see a decent, like a little bit of, like if we were to do it right now, there'd be a little bit of gamma pressure, but not really. It would be mainly driven by like smaller to medium-sized shorts covering their positions and then FOMO just taking it up. Oh, what's up, Fuzzy? How you doing, man? Yeah, I did get a haircut. When you sell a stock, who pays you? You're just selling it to somebody else. It's like a big market. If you just thought about it, it's like there's a giant room of people. And in order for, like, when you click the sell button, you're just selling it to somebody else. This is the thing about the stock market. Any action that you make, somebody is taking an action like opposite of yours. So like if you owned if you were buying AMC at 10, let's just use AMC as an example. You were buying AMC at 10. And let's say you don't have much conviction in the squeeze. It's at 40, you sell. Who do you sell to? Well, you sell to somebody else who thinks it's going to go up more. You, who is the seller, is not thinking it's going to go up more. So there's two people with different ideas about what's going to happen next. One of them could be right. The other one could be wrong. Neither of them could be right. The market will decide depending on how many of those transactions are taking place and the outside news that is coming in and out. What do you think the price is to kick off margin calls? I mean, margin calls happen all the time. Like when we saw the run up from 28 to 50, margin calls were happening. You can't have like when you see these big price run ups, you're seeing margin calls, but margin calls don't have to affect the stock. All they have to do, like they would affect other stocks maybe. Like let's say one of these institutions has like a position that's pretty sizable but is down. But then they get a margin call. Well, they'll sell that position, take the loss, book the loss for taxes, and then use that money to maintain the margin requirement on their AMC short. Now, that selling pressure could affect the other stock, but the margin call isn't them buying back part of their position. It could be, but usually they're just putting up more capital. That's what people get really confused on, and why I see a lot of people that are like, oh my God, margin call. Like everybody's talking about margin calls. It's like, yeah, one, you're never going to see it. Like this is I don't think people just like, it's very weird. Like margin calls are literally just you are below the maintenance margin requirement, the loan to value essentially on your position, and you need to do something about it. There are a couple of ways that you could do it. You can post cash as collateral in order to get yourself above that maintenance margin requirement, or you can close your position. It is your choice, but what they're most likely going to do is just add more cash to their account because they want to keep the position if they think they're right. It's very similar to what happened with the Archegos situation where they were paying the margin, and then all of a sudden they were like, we're not going to pay it. And then Credit Suisse was like, well, hold on, you need to pay it or we're going to close you out. And he's like, no, we're fine. We're good. And then Credit Suisse is like, no, you have to pay us. You have to give us more money. And Bill Hong's like, no, it'll be fine. Come on, trust us. And then after a while, Credit Suisse was like, okay, we're done. We're liquidating your position. And that could easily happen with AMC. Like that could be happening right now where these large institutions are like putting up the margin. They're continuously doing it. But then it gets to a point where they're like, yeah, we can't really do this anymore. We can't like explain this to investors. Like, why are we putting up so much money on this short position on a movie theater company? And they're taking significant losses. And then at that point, it's like, okay, now we're going to cover our position. Can you actually tell when the squeeze is happening? There'll be signs, but there will be signs that the squeeze is happening. Like we'll see volumes skyrocket again. We'll see, like most likely, we'll see AMC's volume go over 1.5 billion in a day. Because remember, let's go back to this daily chart and what happened on January 20. I think it was the 27th. I think it's this day right here. Yeah. So this day right here, January 27th, the day that they cut off the buy button, the volume on AMC was 1.216 billion. That's as they cut off the buy button. Like it could have gone way higher than that. So when we're seeing like really aggressive price movements that could suggest to us that the squeeze is happening, well, the volume is going to skyrocket because one, FOMO is going to kick in and people are going to be buying. The market makers are going to have to hedge the options that they've sold, which depending on what time period it is, they could have to buy a significant amount of shares. And then you're going to have shorts covering their position. Who knows how many of the shorts are going to be covering their position? We don't know. Like it could be like because we don't know how many shares are actually out there. Like all of the counterfeit shares or these like total return swaps or these equity swaps that they've entered into to like mask their short interest. Like we just don't know. Like we could see the volume go up to 1.5, 2 billion, 2.5 billion when we're actually squeezing. Is it true big institutions are selling AMC? I don't think so. I don't know where that's coming from. Where like they could be. If you went long on, if this is how the institutions would like sell their AMC. If you went long on margin above 46 or 48, and you have like a position that's leveraged, and then it goes down to, what did we see, 37, then you could receive margin calls and then liquidate your position. That I could see happening. But look what happened. Like I went through this in a video where it was like, well, the institutions were at a significant amount of shares around here, and the end of the quarter is like right here. So AMC is in the $50 range, but it went from, I don't know, what is this, 9 to 77 back down into the $50 range. But right here where we see that point is like, we also see the institutions like really ramping up their position size. So what we're like, they had a net, because if they sold around here, we would see that reflected in the 13Fs because this is still in the effective period. Like it closed June 31st. So if they rode the run up and then sold at like 55, anywhere above 55 or maybe 40, then we would see that. We would see them decreasing their position size. But what we saw was like net purchases across the board on AMC. Now, what that says is that, like, okay, now the price is at 40, but they were buying all the way, they were buying and holding all the way from 9 to 77 back down to 55, even a low of 39 or 40. And that's kind of where we're at right now. So when you think logically about it, it's like, okay, we went to 77. They were still buying. We've seen these levels before. They obviously think that it can go a lot higher than 77. So what's the point of them selling right now? I just don't think it makes a lot of sense. Like, I don't know, somebody could have some DD out there that would make sense, that why the institutions would be selling. But like, to me, it doesn't look like they would. Cameron, thank you so much for the super chat. Did you read what Boss Blunt's saying? Government will bail out Bank of America, Goldman, and others for over $1 trillion. You have a great show also. I did not see that. But that's interesting. I don't know why. I mean, you might be talking about the capital requirements that they need to withstand. Buddy, thank you so much for the super chat. Guys, thank you so much for sending those in. You guys don't have to do that, and it really means a lot. Without you guys, we wouldn't be able to continue doing what we're doing. So thank you guys. Keep it up, brother. Thanks for what you do. Let me get tomorrow's coffee or liquid IV. Buddy, thank you so much. Let's see. Yeah, the big institutions, it just doesn't make a lot of sense. What's the average price the shorts started to short at? I don't think we know. I mean, we can look at the average days on loan, which is, what is it? No, that's days cover. This one? Average days on loan is 66 days. So when was that? 66 days ago. July? June, July? Somewhere around there. I think the institutions bought shares to loan out for interest, then sell after the squeeze. They could have, but here's the thing. Like, think about this in like a real life situation. Let's say I have 10 liquid IVs, like liquid IV sticks, and then I loan them out to somebody. Well, and then they sell them and dilute the price of liquid IVs on the open market. Okay, cool. I still technically have ownership, but so does somebody else. But let's say that I want to sell those liquid IV sticks. Well, I'm not in possession of them anymore. I don't have them. They're loaned out. I don't have them. So what do I have to do then? Well, I have to get them back so I can complete that transaction and sell. So what they would have to do is issue those recalls so they can get their shares back in order for them to sell. Now, if they did that, they're going to pump a lot of buying volume in because, well, the shares have been loaned out, sold to somebody else. So somebody else owns the liquid IV sticks that I also own, but then I need them back. So then they have to go buy them back and then return them to me before I can sell. But by the time that the shares get back to me, the price is already a lot higher. So even if the institutions are loaning out shares, which they most likely are, but there's no way to prove it. That's the thing. There's no way to prove that. You'd have to be able to see into or talk to them and ask them what they're doing. But like, there's no way to be like, there's no data source to be like, oh, like BlackRock loaned this amount of shares. Like, you don't know. You have no idea what they're doing. And with the cost of borrows, with the way they are right now, doesn't really make a whole lot of sense for them to make, I don't know, 2.32% on that, like loaning out of those shares, because they can use a lot of those shares to push the price further down than 2.32%, and then you're screwed. Then you're down on your total position. What was the short interest when the June 2nd run-up happened? I believe it was like 18, 19. It might have even been 16. Where is it? I need the estimated. Okay, so May 31st, it was 16.59. Now we're at 20.15. So an extra 4%. And remember, this is just the bare baseline minimums of what happened. And then when we look at the exchange reported, like, what's the settlement date on this one? May 28th. So May 28th was the settlement date. right around the time that we started to see the big run up. I believe May 27th. That was my birthday candle. Big run up. So 20% was the exchange reported. So right now the estimate's at 20.15, but the exchange reported on September 15th was 18.99. So we're not there yet, but we're close. Let's see, where is this? Yeah, 102, and then we're at 97. So they need basically net 5 million shares. Exactly, Steven. That's only the reported, and then Ortex is the estimates. What was June 2nd? Like the day. I don't know if it'll give me the day. June 4th. Wait, hold on. Where's the... It's this one. 16.59 was May 31st. June, yeah, and then it's giving it to me on like a weekly time frame. So May 31st, 16.59, and then June 7th, what was it? 11. Or basically 12. 11.93. What do you think the price is going to be for 121.22? No idea. Do I know anything about that $10,064 dark pool fill? Yeah, I don't know. I saw that actually went through, but that, I don't know. That's a weird one. It doesn't really matter. Like, honestly, like, it doesn't matter. They're not doing that. They're not covering, like, they're not like messing around with the prices on the dark pool. It's not happening. We'd be able to see it. It doesn't make sense to cover at 200. Why don't they cover now at 40? What are they thinking? They could have covered at 2. They could have covered at 10. They could have covered at 25. They could have covered at 40. They could have covered at 77. Like, also what you have to think about is that some shorts did cover their position. There are some like institutions out there that were short AMC. Now, like this is just like logic right here. There were, I'm trying to think of a good way to phrase this. Like, this is what most likely happened. There were institutions out there that were short on AMC, and then they saw these price run-ups and they closed their position. But they weren't these like big, bad, crazy shorts that were like deep into trying to manipulate AMC. Those institutions can continue to maintain these margin requirements until like they can't. So those shorts are out, but we still see the short interest at an all-time high base, or very close to the all-time high. So what are we seeing? Well, we're seeing different institutions, different people coming in and trying to short, because in their mind, they don't think that the retail investors have any pull or they're right, or it just in how they evaluate things. Like, they're going to look at it and be like, yep, fundamentally overvalued, short. Is that the smart thing to do in this situation? Oh, we'll see. I don't think so. Virtue just bought 1.8 million shares. They actually closed their entire position according to their 13F, Alina. I don't know where you're getting that from. Maybe they took that out on loan. Yeah, also, if you guys don't mind, just dropping a like on the stream. It just helps get some more people in here. We know there's a lot of shenanigans going on with like YouTube and stuff. So yeah, if you guys don't mind, it just helps us out. I'm just trying to figure out why they did not hedge their risk. They could have some sort of hedge on, but it won't be enough. Like, for the price movements that we could see, like, that hedge will not be enough. It's going to take US default to moon. It may not, guys. Like, we could see a very significant decrease in the share price if we see like a catastrophic collapse in the market. It's very possible. we could go back down to very low levels, but then the short interest is going to be at like, I don't know, 30%, 35%. It's going to be crazy high because they're just going to keep adding to their short position. We'll see the utilization get up to 100% again. So then maybe we could start the next big run up. But is that really what we want to happen? In my opinion, no, I don't want that to happen. Like, I don't want us to really get down to that level. Like, I want the utilization to get up to 100%. I want the short interest to be higher because it's going to have more shorts to cover just off the reported data once we get to that point. But I don't want to see the price tank. Are they opening deep in the money call options and letting them expire worthless to hide the naked shorts? Yeah. Yeah, let me take a look. We saw it happening. I mean, I've seen it a couple of times. Because what they can do is they can guarantee. Let me see where it is. I think might have been January. Yeah, you gotta I mean, this $8 maybe, but I think they were doing it with puts for a while. Where are the puts? Yeah, look at this. This could just be YOLO gamblers, but the open interest on this is 24,281. Now, when they do this, when you trade these really deep out of the money puts or the really deep in the money calls, you can guarantee the counterparty. What you can do is that since that option is going to be so illiquid, like nobody wants to trade it because one, it's either way too expensive or nobody thinks it's going to hit. You can go to like the market. I believe it's the market maker and buy them. And you can do this weird transaction to basically kick the can down the road with your FTDs and meet your broker's closeout requirements and basically like spoof the short interest because it looks like that you're completely hedged and you're fine, but you're not. What's up, SCV? Salmon fishing at the moment. Can't wait for tomorrow. There you go, Woodrunner. No. Pickle juice popsicles? Guys, that's aggressive. You could literally just drink liquid IV. Like, come on. Or get a Pedialyte. What's all this pickle juice stuff? Like, yeah, probably going to give you some electrolytes, but it's going to taste terrible because you're basically just drinking vinegar. Yeah, TMI's avocado. You could. What's up with BBIG 260% short interest? No way. No way. No. 22% short interest on BBIG. I have seen and heard there was some report or a lawsuit that GameStop short interest was like 250 or 260%. But BBIG is not. It does cure hiccups. It could. We're overcomplicating water. Yeah, bro. Just put some powder in your water and you'll be good to go. Okay, so let's take a look at Let's take a look at this margin debt chart and just look at why this is so important. We were lollygagging a little bit. Okay, there's a couple of other things that we didn't get to touch on in the video today that I really want to like go deep into a little bit more. This chart has been very important at predicting when big corrections happen. Look, so it's inverted. So the red line, when it goes down, it's actually margin debt going up. The blue line's the S&P 500. When it goes up, it's actually going up. It just, when they invert the chart, it's just easier to see the divergence. Like, because up here, it's harder to see. Like, you can't actually really see very well that margin debt came down and then ripped back up. But here we are. So here's what we're looking at. Look what happened in the little .com bubble right here. Margin debt rips, comes back down, steadies, and then keeps coming back down, but it leads the market correction. The deleveraging comes first. Now, it happened again here. It ripped up all the way up into 2007 and 2008. Everybody knows what happened there. Then it starts to come down, leads the market correction. we've started to see it happen here where it's ripped up at a really fast pace. Like this is like one of the most fast-paced run-ups in margin debt that we've ever seen. But here's what happened on the last time that we saw this data, which is why we were talking about it so much. Right here, we saw this margin debt number start to come down with the S&P continuing to go up. So that's an indicator of, big money's starting to get out. And we're seeing this deleveraging that we thought was going to happen in Q4, but it's starting early. And we were waiting to see what happened in August because so it went down in July and then it came back up in August. But the amount that it came back up was more than it fell. So they just went even deeper, like in terms of like this is retail and institutions. Now there's definitely like unreported margin in here because we know that the derivative is OTC derivative or the derivative exposure is like $188 trillion. So there are things that are left out of this, but when you track this chart, it looked like people were going to start to get out. But now they've just went back up. So that could be a sign. It could be a bullish indicator, but also it's hard to see here, but 2007 went down, comes back up, bounces around, and then continues to go down. So once we get September's numbers, like next month, we're going to get a better understanding of like what's going on. But I don't know. You can't really pick a direction based on the margin debt chart right now because like we saw Goldman liquidate their 25% of their equity portfolio in Q2 because they were thinking that everything was going to come down in August and September. And they were right. They were just a little bit early. But it looks like everybody just came in and bought the dip with leverage. So it's just even more risky. And that's why when we talk about a potential market event, well, we haven't really seen the deleveraging yet. Like every single time in the past, we've seen the leverage levels go down before the market starts to sell off. We've seen the leverage levels start to go down here, then the market sells off. So they're basically protecting themselves against the major market event that's coming, but we're not seeing that here. We saw a little bit of a fake out and then it ripped back up. So if we have this correction now, if it happens with the debt ceiling, Evergrand, inflation in Q4, when we see the earnings start to come out and then all these companies are going to miss and guide down because the costs are so high, then the sell-offs that we're going to see are going to be more aggressive because of the margin calls and the liquidations that we would then see. It wouldn't take as big of a move to trip the switch of like wide-scale pandemonium, just craziness. Oh, what's up, Pam? That's what Kramer said Friday? No. Am I related to Matt? No. People used to comment on my like old videos and they thought I was like Matt's undercover account. And I was like, guys, I've got like 25,000 subs at the time. I'm pretty sure that Matt is not going undercover on a faceless channel to like start talking. I was like, this doesn't make a whole lot of sense. Let's see. Completely random, but any chance you research any of X Leverett players? Sure. No. Let's see. Did I talk about how the Robinhood drama yet? Okay, so the Robinhood drama is the liquidity crisis thing. Here is the weird discrepancy that you really, this is how they're going to get out of this. So those emails, I think the dates match up where they had the liquidity crisis, they call their investors, they get more money, and then Vlad goes on the air. So yeah, so I think I have to go this way for it to work. Let me go on the thing so it makes sense for you guys. So this way. Okay, so over here is going to be like, oh shoot, these stocks are ripping. We have a problem. Emails, liquidity crisis. We have no money. We need more money, and we got this big call, which they basically got margin called. Like, and then they call their investors and are like, "Hey, help us." And then he goes on air. But by that time, they have the money and it's not a liquidity crisis. That's the weird thing. So that's probably how they're going to like finagle their way out of this, because they were like, oh yeah, there was a liquidity issue over here, but then we got the money and then we told you that there wasn't a liquidity crisis because there wasn't. I think that's how they're going to mess with it. And then there's something that is mentioned that's like Citadel is screwed, like they have a big problem. Like the one thing that I have to research this more, is that it said like Citadel wanted to limit payment for order flow. Why would they want to do that? That's how they make their money, by front running all the orders and then crossing the bid-ask spread because of all the orders that Robinhood and all these like Webull and all these other brokers are sending them because they pay for it. But the real issue with that whole situation, and the reason why Robinhood took so much of a hit, is because the NSCC was like, we need this amount of money. And Robinhood was like, what if we turn off the buy button? How much are we going to have to give you then? And they're like, half. And Robinhood's like, deal. Buy button off. Here's the other thing. I don't think a lot of people remember this, that I brought up in a couple of my other videos. Robinhood could get popped for insider trading. This is cool. Okay, let me see if I can find this again. I think it's this one. Let's see. Investigative report. What happened? Oh, I'm not paying for your stupid article. Let me see if I can find this, because there's like a lawsuit that's about like their insider trading. Let me look for this real quick. Oh, the Bloxburg. Yeah. That was a big gamble. GameStop saga, July 1st. Maybe it's this one. Expensive? No. I know I talked about this in a video before. Wait, Robinhood's coming to college campuses? That'll be fun. I'll go to that. Okay, so here's what, I can't find the article right now, but here's what the article said. The article said is that Robinhood employees that owned AMC, GameStop, or any of these other stocks knew that they were about to turn off the buy button, and then they sold. You can't do that. That is like, you have inside information on what is going to happen to a stock at like right before it happens. And then you, like, if they knew and then they didn't sell, trust me, bro. I'm trying. I'm pushing. I'm trying to find it. Robinhood crypto wallet thing. I mean, that's going to be good for your business, their business, but I mean, they're still not great. Did I get all of my homework done? No, I decide not to do homework anymore. You saw that article too? Okay, cool. Not crazy. I heard from a guy that AMC might go up or down. I think he might be onto something. Let's see. February. It wasn't February. Up and early. No. Interesting. How is this article not here anymore? That's so strange. I remember you showing that article. Okay, cool. Thank you. I'm not a psychopath. Or trade sideways. Yeah. Bad actors get bonuses in these industries. I was wondering if maybe Robinhood might be a patsy for Citadel in the way of propping unpopular replaceable entity. They're business partners. Like, Citadel pays Robinhood a substantial amount of money for that order flow. Robinhood gives them the order flow, and Citadel is then able to make their money. And with Robinhood being like the spot that many retail investors start on, Citadel doesn't want to screw over Robinhood because they're like the go-to in terms of retail trading. Like just the simple options stock. Like Robinhood is a big name in the industry. So they're not going to want to ruin that relationship or like send them down because like where are all those other people going to go? Yeah, they might transfer their broker to somewhere else that Citadel also like gets the order flow from, but it would cause a significant decrease in their business. Pam, that's true. I try not to go to school ever. If I don't have to go, not going. I know you mentioned this before, weekly options versus shares, and people can do what they want, but Trey just put out a video addressing, and he says a lot appear to be losing money. Yeah, I mean, they are. Like, you can do what you want. If you want to go ahead and gamble on weekly options, do what you want. I'm like, I don't, if I'm playing weeklies, like in my mind, this is how I trade options most of the time. The money that I put in is gone. It's zero now. I put a money into an options trade. In my mind, you have to think of it as gone because depending on what it is, especially with the way that I trade earnings, it's like, this is most likely going to expire worthless. You just have to be okay with that. Yeah, same opinion with the computer share stuff. It's not really, it could be good, could really do nothing, but at the same time, it's like, you can't tell everybody to go do something that's going to force a stock to do something. Like, it's going to happen when it happens. Like, we can't come out and be like, everybody go do this. Can't do that. Even if I liked it, even if I was like, this is the best thing ever, I can't come out and just say that to everybody. I would rather be able to enjoy my tendies versus have them and then be in prison. That's why anytime somebody asks like about like specific options, it's like yeah, like a specific trade. It's like, do what you want, but like I can't really say that. Like I can't say yes or no. SB, I will set a stop limit on percentages of my AMC once it starts ripping, rather than just clicking on close. There you go, Dean. If you don't understand something and do it anyway, that's definitely ignorance. Repeat it equals crazy or stupid. There you go. Can we all become SEC whistleblowers? Hey, if we did, Gary, I've got like a bank of information on the internet if you want to take a look at it. Prison tendies would be horrible. Yeah, it would. I do better on the roulette wheel than on options. I know somebody that crushed it on the roulette wheel one time. You can comment on the risk of that particular option compared to the others available. Yeah, I can. And I can go over basic strategy, but I can't say I just, even if it's like borderline, I just don't go near it. It's like, not worth it. Hot dog flavored tendies. No. I mean, we can look at, like, I have a bunch of options right now. Like, but until I close them, I won't tell you guys what I have. I will tell you that they're not close in expiration. Yeah, I don't think I have anything close right now. I also have 2 other accounts that I like don't really know what the number of shares is in them. I just don't know. And I don't look at them ever. So like when I look at my like normal brokerage account, I'm like, oh, this is what the number is. But like there's also like other shares that are like not locked away, but like I don't look at it all the time. So those are kind of like my infinity pool shares where like those are like set aside for when or if we really get up to crazy high levels. Can people at least roll their options? They could. They can easily do that. SCV is all about his dipping sauces. Oh, dude, I got some ranch today. I made chicken burgers, guac. I was chefing it up today. Those are in my Roth. There you go, tax free. Apparently, they pay whistleblowers very well. Yeah, they do. They paid somebody like $100 million, something like that, something crazy like that. Within the last 2 weeks, it was like they keep breaking records for the whistleblowers. Also, this we haven't talked about this yet. The Michael Burry stuff with GameStop. He got his subpoena. So let's pull that up really quickly. Archive. Is this going to be? Nope. Let's see. There's like a bunch of Michael Burry archive accounts. Here it is. Okay, there's like interesting language in what he tweets right here. So it's like, so who got an SEC subpoena over GME? So he's saying like, who is it? Like, who else is on here? He's like, I know who. They're on my subpoena. And then he says, with all that's going on in the world. So I feel like he's referencing Evergrand here. Like, that's just like my feeling, but like, it's just speculation. He's just on Twitter, like doing his thing. Like, he could just be talking crap on Twitter to make sure he's still relevant. Like, that could easily be what he's doing. But at the same time, there's a subpoena out there with a bunch of other institutions. So who is it? Well, who knows? Like, nobody knows. Via UPS. A subpoena has been issued to Scion Asset Management in the above reference investigation. So there's 100% confirmed an investigation into GameStop. And this is the thing. People were saying that like, oh, this is only GameStop. Do you think that the institutions that tried to short GameStop into the dirt were only shorting GameStop? No. They were most likely shorting AMC, a couple of these other companies that they didn't think were going to be in business. So it's one and the same, in my opinion. And when you look at the GameStop, the quarterly report, it says they're looking into GameStop and other stocks too. They don't mention who it is because they can't really do that. But the language says and other stocks or securities. So Daniel, thank you so much for the super chat, man. I really appreciate it. Late to the party, SEC September 28th zombie situation. How does this affect the market? Daniel, I'm not really sure what you're talking about there. Dr. Mike, the sky's falling, Burry. I heard Clorox is partnering up with AMC. What? What? No. I mean, I think they already Clorox is on. Yeah, this is old, I think. I don't know which. Yeah, I think that's old. Somebody send that to me. Because I just looked at something and they like it as of June they had a relationship with Clorox, but yeah, Daniel, I'm not really sure what you're talking about there. October 1st options. Yeah, Clorox did months ago. There was an ad on the radio that featured both of them. I wouldn't say it's a partnership though. Pam, thank you so much for that big super chat, Pam. I really appreciate that. Thank you very much. Just wanted to show some love. Thanks for everything you do for our community, STV, Pam Cakes. Pam, that really means a lot. Thank you. Why aren't AMC ads on YouTube? Well, they only have that one ad and they have a $25 million budget. And the thing is, there kind of already is AMC ads on YouTube because you have Trey, Matt, me, TMI, Jeff Forbes, Wrench Capital, Simulating Trade. You have all these people creating content about AMC. They're like, these people are just going to do it for us. So like they kind of already have YouTube taken care of. They're going to go TV, radio, maybe. I'm not sure. But yeah, I don't really think they need just Just look at some of like the engagement that like some of the big like Trey and Matt get on like a day-to-day basis. It's like, we're getting this information. We're getting like information about our company out for free. Or we could go and pay for it, and our ads are just going to end up on their videos anyway. So like, what's the point? Waiting on an address. Ooh, Fuzzy. I actually have the address now. I got to send that to you. I figured it out. 7 ads total to be released over the year. Oh, so are they gonna make more? That would be pretty cool. What do you think about simulating trades theories? I haven't watched a lot of his videos recently. I'd have to do that. Average Rob. Let's see. What were you saying? October 1st options in next week. I mean, they're probably gonna try to bleed them out. And again, I just think we're going to see a lot of volatility in the markets this week. I think we're going to look like we're going to head in one direction, and then some news article is going to come out, and it's either going to make us rip in the market or it's going to send us going down. And I think we're going to see that happen a lot. I think tomorrow we're going to see it, especially I think tomorrow's infrastructure bill. And then throughout the end of the week, it's going to be the debt ceiling situation. So we're going to see these articles come out, and they're going to move the market. Do you think the NCAA and AMC would partner up? Oh, if AMC did March Madness, I think they will. I'm going to tweet that out. That's a tweet right there. March Madness. Everybody go blow this tweet up so we can get Adam Aaron's attention, so we can get March Madness in AMC. All right. Ready, everybody, for this tweet to go? Everybody go blow it up. All right, it's out. Do your thing, people. I've been predicting things all year long. Interesting. I haven't really predicted anything. All right, my tweet is out. It's over here. This is the tweet. Oh, there you go, Fuzzy. So here's the tweet. It's over on my Twitter. If you guys could go give it a like or a retweet so we can get Adam Aaron's attention, I think that would be wild. If we got March Madness games in AMC theaters, that'd be crazy. AMC Groupie, thank you so much for the super chat. Just because I don't like being left out. Thank you very much. Did I win? Check comments. Fuzzy, you did. I saw that. Oh, you guys are doing pretty good. Everybody's got to go like this tweet, or else we're not going to get Adam Aaron's attention. Or you could just not. Whatever. It's fine. When's our next earnings? I think we will crush our earnings so much it will cause instant FOMO. Well, last earnings, we saw AMC 8%, I believe, after and then we got knocked down. I think that was the day, or that was a separate day where it was like a saw an article about AMC being sued. FUD or something to worry about. Let's look. What's your Twitter? My Twitter is shortthevix1. Right here. Boom. That's me. All right, let's look at this lawsuit. AMC lawsuit. AMC investor sues the board over 1.2 billion Carmack acquisition. Suit comes as AMC faces class action. Investor product went Thursday after the board rejected demand. I've reached my article limit. Screw you, Reuters. We notice you're using an ad blocker. Yep. That's how these things work. Once. All right, here we go. Oh my God, these people. Just let me read the silly article. Come on. All right, so it looks like they're getting sued over some acquisition. They can do what they want. When Jim Cramer liked and retweeted. Thank you guys. Did I get a haircut? I did. Okay, if Trey can get Kramer onto a YouTube video, I don't think Kramer would do it, but he should. But that would be awesome. Not anything to worry about. Companies are constantly getting sued. Reuters loves digging up dirt to spread FUD. FUD is not always fake news. Yeah, I don't think it's anything to worry about. You look pretty. Thank you. I appreciate it. Gotta love that slider keyboard. What did I do? I have a keyboard. This is my keyboard right here. It's like this silly Mac one. Policy. Okay, so we're gonna have debt ceiling, we're gonna have infrastructure bill, and I think there's another bill as well that's coming up. And we're gonna have Evergrand stuff. So watch to see if China is gonna step in. That is gonna be the most important thing. If you start hearing more of China Evergrand bailout rumors or like facilitating the restructuring, that's bullish. That will calm a lot of people down. Because if they are able to do that and contain the situation to just Evergrande and not let it spread, then everything's going to pretty much end up okay. And when we're looking at here, the price action that we saw, I mean, it looks similar to what we saw. We saw a little run up, run down, and then rip, run up, run down. We could be getting ready to go. But at the same time, you can't really look at previous price action and guarantee that something is going to happen in the future. I think they will step in. China doesn't like failure. I think they will, or at least partially. What do you think? I mean, they've already, let me look. Let me see if I can find it. Evergrande won't be Lehman. I'm trying to find it. Yeah, there already are rumors that like the Chinese government is stepping in. They've started, but we need to see more of that. And let's pull up the SPY really quickly. Remember what we were talking about for a while. This line right here, the 50 on the year to date. Look what happened. We've seen this a lot. We'll see a dip below the 50, comes right back up. Dip below the 50, comes right back up. Below the 50, comes up. Below, up. We dipped seriously below and then came right back up to over it. If we were not able to break above this 50-day moving average and we were going to use this as resistance now, I would have started to look at this 200 because we haven't tested the 200 in 2021. It hasn't happened. So the fact that this dip was just bought really quickly, that's a bullish sign. Spider, thank you so much for the super chat. Not FUD, but the day traders been taking our squeeze money. I like what Claybro says about low volume will cause the MOAS. Yeah, it could. I think what a lot of people So day traders, very similar to options. They're just going to add fuel to the fire in one direction. Like if we're running up, they're going to initiate their buy orders and continue that buying volume on the way up. If we're selling off, they're going to keep entering their shorts, and that's going to keep pushing it down as well. But with the low volume, I think what a lot of people think about is like the days to cover. So if there's not a lot of shares being traded, meaning, well, we hold the supply, there's not a lot of transactions happening out in the market becomes slightly less illiquid. So it's easier to have those price jumps. And since there's not a lot of shares being traded, it's going to be a lot harder for those institutions to cover like all of the short shares. Like the volume on Friday, 32 million. Well, the short interest, the shares on loan, 113 million, but what is the percentage of the free float on or short interest? That's 2% difference. What was the exchange reported? 97. So we're probably at like 99 or 100 million shares short. That's triple the volume in a day. Like if they were to cover all of those shares, it would take some time to do that. Like button, people. Yeah, if you guys don't mind, just dropping a like on the stream. It just helps us get some more people in here. YouTube's been messing around, so if you guys would like to help, just drop a like. The 100 was also dipped below on the SPY. Ooh, interesting. The 100 and the 50 must be really close then. I like that. I heard that Mr. The Legacy couldn't handle my intense investigative journalism. Nah, Rogue's just chilling. Rogue's got a baby on the way. He's got a lot of what do you call it? He's got a lot of real life things to like he has like a family and he has like a baby on the way. Like he's got stuff to do. Let's say in the computer share deal, you think that's the way? I don't think any one thing is going to cause the squeeze. Is everybody registering their shares on something and still having shares out there in the market going to stop them from creating counterfeit shares, selling them into the market and messing around with the stock? In my opinion, not really. The one thing that would, here's the thing. Okay, so when we think about like comparing AMC to another squeeze, it mimics more Volkswagen. GameStop mimics more Overstock just due to the catalyst that could set it off. For GameStop, it's crypto dividend, which Overstock did in some form. For AMC, I see it as like a potential disclosure of ownership. Like, oh, there's a way for like retail investors or institutions to come out and show that they own more than the float plus the amount of shares sold short. If that happens, it's like, well, they've done something. We kind of saw it with the say vote, but it wasn't concrete evidence because it was just statistical analysis of what could be out there based on the data that we were collecting. So that is the one thing that ComputerShare could do if we saw the number that, 513. So it would be over 600 million shares that would need to be registered on there. But if people are still holding shares outside of ComputerShare, it's like, well, hold on now. That's not supposed to be there. But like, depending on how many shares are actually out there, let's say it's 5 billion, which was the upper end of the 99% confidence interval that we saw in the say vote. Let's just say it's that. Well, that's like, I don't know, 1, 2, 3, 4. That's like, I don't know, 2%. Oh, I can't even do math right now. 10% of everybody's position would need to get registered. Is everybody going to do that? Probably not. Like, it's just not going to help anything, I don't think. Matt's Duck Suspenders, thank you so much for the super. What do you think the chances of AMC waiting till next year to pop? I think it's going to happen when it happens. It really, it just depends on what the overall market conditions are allowing and what the price action of AMC like is. Like, if we see another big run up before next year, that could easily cause a lot of these shorts to cover and make that next price movement to the upside, like a big June or a January event, really aggressive and cause more shorts to cover, which could start the domino effect. But again, we could have another one of those June or January events, come back down, settle, And then we're waiting on the next one, and that one could be the next big one. We don't really know. Like, we could see these slow stair-stepping movements to the upside every, I don't know, quarter or two. They're not really stair steps. They're like really aggressive parabolic moves, and then they come back down. But yeah. Mrs. Turtle says hello. Hello, Mrs. Turtle. What's the difference between SPY and VOO? I think VOO tracks the S&P. I don't know, actually. I hope it happens by March so that I can rent out a theater and have a watch party with my Bruins at the Final Four. There you go. That would be fun. That would be real cool. And then we also have the Fed on the taper. It looks like the Fed is really looking to start the taper in November. I think in November, we could see an initial move to the downside just due to tapering, but then everybody's going to realize, oh, they're still buying a boatload of assets. Like, just because they're like decreasing the amount, well, the amount that they still are purchasing is huge. And then it would basically be done by the middle or end of 2022. But then that's when they start talking about raising rates. And once they start doing that, the market's going to freak out a little bit. But that's a decent amount of time from now. And then what do we have? Let's do some option chain stuff for next week. Are you playing VIX for the special dividend? Oh, Nepal, I'm a little confused. I'm not sure. But option chain. This week, remember, weekly options expiration period, nothing too crazy. And this is also 2 weeks after the monthly in September ended up being a pretty big option chain time. And a lot of people were saying we didn't gamma squeeze. We kind of did, because remember, we went from very low 30s up into the low 50s. That's pretty solid. And like, when we see those price movements, yeah, like the expiration date for those options is coming up. They're going to hedge them. So we did kind of see a little bit of a gamma squeeze. We just didn't see enough pressure to the upside to send us to that next level. But for this week, we already have 118,000 contracts out of the money for the call side, but only 30,000 puts. So what we're seeing here is that if we see any price movement to the upside, we're going to see more calls go into the money than if we were to see a downside move on the put side. So if we move up, we're going to see more aggressive price movement in terms of hedging than if we were to, like, in terms of the buying volume coming in, than if we were to go down and then the short volume that would come in from the market makers hedging then, if that makes sense. Because when you sell puts, you have to short or buy offsetting, like puts with offsetting deltas, in order to maintain that directionally neutral status. Do you guys still do group video chats? Haven't seen any lately. Yeah, we do. A lot of people have just been very busy though. I have school during the day, so I can't come on TMI's lives very much anymore. Yo, Vix, can you shout out my 11-year-old son, Carter Ray? What's up, Carter? We always chilling in the hot tub listening to Late Night Fix. There we go. That's very cool. The YOLO has been my most successful tool in the tool bag. Sometimes it is, sometimes it isn't. Let's see. Okay, yeah. So, and then key levels on the option chain. I don't know if we did this today in the video. 42 a little bit. Nothing crazy till 50. But then we have a lot, like these contracts would pile up. Like that would be a decent amount of contracts if we were to crack 50. But I'm just expecting just lots of volatility this week. Up, down, up, down, up, down. Like we're going to see like volatility, in my opinion, just because of all of the like policy news headlines that are going to be coming out about infrastructure bill and the debt ceiling bill. And we also have an increase in the exchange reported short interest. So it's very possible that we see the estimated short interest go up, utilization go, oh wait, hold on. When was this? September 15th? What was the estimated? Come on. exchange. Yeah, I know. What's the estimate? 19. Okay. It may not change a whole lot because the estimate on the 13th was 19% about, and on the 15th it went up a little bit. So we actually might see the estimated short interest go down, because the estimate was right around where it should be. So maybe we won't see that much of a change, but we definitely could, especially with the ramp up that we've seen in this last week. Andre Jake had a video talking about how small of a position some institutions have invested in Evergrand compared to their total AUM, and it's pretty small comparatively. Why? Well, they're diversified. They're gonna diversify their portfolio across many different asset classes and companies. So they're like, remember, there's a lot of these not so much like reporting standards, but like standards that they have to follow because they're managing other people's money. So they can't just like YOLO on like an AMC short or like for all we know, it could just be massive home office, like family offices like Bill Huang that are just wildly over leveraged on their AMC and GameStop shorts. Very possible. And remember, total return swaps. That was the downfall of Archegos. And we've started to see those OTC derivative conversations pick back up again. And remember, a while ago when I was talking about Archegos, it was like, they're not the only one. There's no way that they were the only one to exploit this loophole of we can lever up basically as much as we want and nobody's going to say anything because we can just go to a different bank and just do it again and just do it again and do it again and do it again until we have as much leverage as we want to. It was like 20, 30, 40x leverage. It's insane. That would be like if you had a $1,000 portfolio and you could then, or $100,000 portfolio, but somebody allowed you to trade $4 million worth of assets. That's crazy. The position goes down a little bit, your equity portion is gone. Less than 1%, it would have to go down. You need all of those investments to go up, or else your equity gone. Daniel, thank you so much for another super. Not to waste your time, but check the price of Blockbuster in the last 30 days. Is in shell companies using leverage, September 28th effective. What's the ticker? What's the Blockbuster ticker? It's like OTC now at this point, like very OTC. Let's invest in Radio Shack. I haven't seen a Radio Shack in a while. There used to be one in my town, and now it's gone. Yeah, I talked about the Benzinga article a little this week at some point. Yeah, we talked about that. Yeah, so going back to the option chain, like 50 and then nothing. Like this week's nothing so far. But people are going to be gambling on these YOLO options. It happens. And then for the October monthly right now, what are we seeing? 45, 50 is not too big. The October monthly is not setting up great right now. But as we get into the next week or so, we could see that money start to pile in. But then I think November or December, probably November, we would see something. For the option chain, we would start to see a little bit more action, but then January is the big one. BBI for Blockbuster. That's not it. I don't see it. So OTC, the ticker is actually Blockbuster? No way. I'm not getting it on. Oops. I'm not getting it on here. Oh, Ace is going to buy 100 shares tomorrow. There you go. Radio Shack. I remember Radio Shack. Would you be willing to look at AMC versus BTC on the daily chart? Yeah, M. Kriegs has been talking about that, the inverse relationship between Bitcoin and then AMC and GME. What's Bitcoin doing tonight? What are we doing over here with Bitcoin? We're up a little bit. What's it? Wait, hold on. This is drunk. This is fake China news. Rips back up. Yeah. I mean, it's up a decent amount. Well, 1.9% right now. Matt's Duck Suspenders. Thank you so much for the super. I'm a 63-year-old retired Army guy. Every morning during the week, I jump on GTA and race folks. I heckle folks to beat me or buy AMC. Matt's Duck Suspenders. That's hilarious. Thank you for the super. Oh, Hugh, thank you so much for the big super. Just a down payment on the pre-order for your OnlyFans subscription like we talked about. Thanks in advance. Hope this helps with those tuition payments. Sincerely, your favorite sugar daddy. Hugh, thank you so much. Also, guys, tomorrow is the day that I have to get my car towed. But good news, I don't actually have to be at the place that it's getting towed to when it gets dropped off. So all I have to do is make sure the car gets on the tow, then I'm good. Then I just have to figure out a way to get to the car place, then I'm good to go. But I can just wake up, call, I think AAA, hopefully, and then they will come get my car out of the garage because my car is broken. Oh. I didn't do anything. I didn't do anything. The car literally, I'll turn it on and then the engine will just die. So that's not good. Can't really drive it anywhere. So it has to get towed. It's not good. Not good. I feel like a big green week is ahead. It could be. If things start to align and we see like run-ups and good policy and things like that, we're gonna see some like bullish price action. But if we see some uncertainty and some fear in the markets, we have more downside ahead. Like that's why this week is important. The market is probably going to pick a direction. We will probably see another test. We'll hang around that 50 day moving average. And if we can like have a significant break above it, bullish territory, if we break below it and we use it as resistance now, then we're going to be in bearish market territory. Yes, there's gas in the tank. That doesn't sound reliable. Yeah, well, you know. Yes, guys, there's gas in the car. There's 100% gas in the car. It shouldn't be bad gas. Definitely put gas in it. Air filter is plugged. That better be the issue. It better not be, oh, your engine's screwed. Because then I have to get a new car. And I'd rather not do that. But if I have to, I have to. Are the wheels on? Yeah, the wheels are on. Uh-oh. We got a couple more minutes. Do you think AMC really has a negative beta? Yeah, I mean, it's beta on a 1 year is negative, but that doesn't mean that it's going to not follow the market on most days. It easily could inverse the market, but it also could follow the market. It's just going to do what it's going to do on that given day or any given time frame. It's not going to be a deciding factor as to whether we sell off or not. Have enough blinker fluid? Yep. Everybody's been making blinker fluid comments. Gas filter? Could be. I was thinking spark plugs. That's what I was thinking. I was thinking it was spark plugs. Light build grease. Guys, I mean, even if I knew what the problem was, I couldn't really do much about it. Still got to go to the mechanic. I still think AMC versus BTC is interesting. Yeah, it is. Do you hear a clicking sound when you start it? I don't think so. TMI's box, it also probably is a timing issue because the car has had timing issues in the past. Are the windows up? Yeah, the windows are up. Fake gas. Could be a starter. Yeah, well, it could be a lot of things. We're going to see, though. We're going to find out how much this is going to hurt my bank account. All right, we got 1 minute left. Hedgie shorted your car. Yeah, and now I got to walk everywhere. Calls on my cardiovascular health. It's probably the windshield wipers. Probably. Where are you towing it to? I'm not telling you where I'm towing it to. Gas is being shorted by the hedgies. Yeah, it is. All right, guys. It's 8:30. Thank you guys for coming on for another great stream. Depending on how tomorrow goes, probably going to come out with another video on some important information that I think you guys should know. But thank you all for coming in here, liking the video. Special thank you to all of you guys who are dropping supers. That really means a lot. You guys don't have to do that. And for everybody that just wanted to come in and hang out, you guys are awesome. Thank you, and I'll see you tomorrow.